Good morning. We'll put the chat up. You can drop a comment in the chat for those of you just tuning in. I see there was already some people chiming in there on the chat. We'll wait just a few minutes to get started, let everybody have a chance to jump on, and also give us a chance to get live on all the different platforms here. So hang tight with us, everyone. We'll get started soon. Hope everyone had a great weekend and is ready to get back to the grind today. We'll see how the rates are looking today. Always interesting to check them out on a Monday, the reset of a new week. So we'll be getting into that today, as well as our special deep dive topic, as we always do. Good morning, Matthew. Good morning, Christina. Everybody in the chat, if you're just tuning in, feel free to drop a comment in the chat there. All right, for those just tuning in, we're waiting just another couple seconds here to get live on all the different platforms. So just 1 minute. All right, it looks like we are good to go. So we'll go ahead, excuse me, we'll go ahead and take the chat off here and we will get into it. So welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. What we do on this show every day is we pull up the rates, actual live rates for today with some different scenarios, different types of loans, and then we do a deep dive into a different topic every day. Now, today's deep dive topic is going to be prime jumbo loans. So we will have Jose pull up some actual quotes for that and talk about how we can do those loans and what they are. But before we do that, like we do every day, let's go ahead and pull up our rate tool and pull the actual rates for today. So Nick, let's go ahead and pull up our pricer and get into it.
All right, thank you, sir. Let me go ahead and switch my screens and we'll get into the live rates. So as Kyle mentioned, this is our pricing tool. This is for our team of mortgage professionals. We have over 300 licensed loan officers, and we're licensed in 22 states for primary and second homes. And we can do our commercial business purpose loans in 44 states, so pretty much every state out there. So if you'd like a full loan estimate, please get with one of our team members. They'd be happy to break this down in full with all the costs. This tool will show us the general rates and APR for our general programs today. So today is April 17th, just after 11 a.m. Eastern. So most of our standard programs have live rates now for the new week since it is Monday. So we're going to set up a basic scenario for all of our demos today. We're going to do a $400,000 loan amount. We're going to set an LTV of 80. That's 80% loan, 20% down payment. We're going to tell the computer to find the best rate at 99 price. What that means is we're going to tell it to find the best rate at one discount point in cost. Most of our customers are asking to buy down the rate a little bit, so that is the typical request. We are going to compare our conforming conventional loans to FHA as the next option. And then we'll go into our non-QM expanded guidelines where we have over 5,000 additional loan programs with alternative income guidelines. We can obviously offer VA to our eligible veterans since not everybody is an eligible vet. We don't do that live, but we'd be happy to quote it if you are. And same with USDA. If you're shopping in a USDA eligible area, which is typically a rural area that's eligible, please let us know and we'd be happy to quote that for you. But since not everybody is, we don't do that live either. So we'll start with our conforming conventional programs. We're going to set everything up as a purchase, 30-year fixed loan, standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all of our demos today, we'll use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So let's check out our conventional rates this morning. Looks about the same as it was last week when we ended. So not much movement yet this morning. Hopefully we see some more positive action this week as we have for the last couple months. Right here at the top of the list, our best rate today, 6.5 rate for 1 discount point in cost and a final APR of 6.676. So remember, we use the APR to compare across programs. So we'll use that to compare to the FHA and non-QM options as well. So if for any reason our customer doesn't qualify for conforming conventional options, typically the next option that we would choose is an FHA option. So we'll set everything else up exactly the same, and we'll quickly compare our FHA rates to our conventional rates. Remember, FHA has a little bit more relaxed guidelines on credit as well as debt to income ratio. So some great options here. And we can see lower rates, 5.625 for 1 discount point in cost. But remember, FHA does have an upfront and yearly mortgage insurance that's paid monthly. So we always have to compare the APR, which is the final cost. In this case, 6.227, still a little bit lower than conventional. So typically FHA is a little bit higher. Recently with the changes, now it's coming in, at least in this scenario, at a little bit lower cost to our borrowers. So definitely recommend our borrowers that even qualify for conventional still consider FHA as a great option now. Now, if there's any reason our borrower can't qualify for conventional or FHA, a lot of other banks and lenders don't have other options. Fortunately, we have over 5,000 additional loan programs here under expanded guidelines, also known as non-QM programs. So if we set up the same exact scenario, 80% loan, everything else staying the same, primary home, we have one new option that pops up for our non-QM, which is income verification. So for FHA, for conforming, we always use full doc. That means 2 years of tax returns, what everybody's pretty much used to out there. But typically we would select a non-QM expanded guidelines program to use alternative income. So we usually wouldn't select this. We would usually choose a 1-year alt doc, a 2-year alt doc, an asset related program. Business bank statements are very popular. Investor programs are for investment properties only. But our most popular program by far is the personal bank statement 12-month. We also have, as you see here, 1099, P&L, all kinds of different options. But the most popular program for a primary home purchase is going to be a 12-month bank statement program, and that's going to be for our self-employed borrowers. Many times our self-employed borrowers have various write-offs on their tax return and sometimes don't qualify at all, or maybe don't qualify for quite as much income and therefore not as much loan amount as they want. So in this case, we're going to use 12 bank statements, their last 12 bank statements, to look at their cash in the bank and determine a debt to income ratio here using those bank statements and the cash in the bank rather than the tax returns. So typically for most self-employed borrowers, we can qualify them for much more income and therefore a much higher loan amount. So these non-QM programs that we have here are great problem solvers where a customer may not qualify or may not be able to reach the home of their dreams with the current qualifications. So let's check out our bank statement programs this morning. Looks like the top option here, about the same as it was last week, 7.375 rate for 1 discount point in cost. Oh, actually, this one's a little bit lower, sorry. 7.375 rate for 0.75 discount points in cost for a final APR of 7.447. So remember, the APRs for the conventional was just over 6.5. This one's just under 7.5, so very comparable. Remember, this is for a customer who would not otherwise qualify for this home in this case. So great problem solvers here. Many of these programs allow things like credit events, foreclosures, bankruptcies, things like that. So if you scroll down here, you'll notice we have dozens and dozens of different programs that can use bank statements. So please get with our team. They can find which one of these programs will fit best for your exact scenario. Now, before we go into Jose's example of a jumbo loan, which is not really listed here, we always want to do our investment properties. So we'll set up the same exact scenario for an investment property purchase, 80% loan to value, 20% down payment. And we're going to simply compare our conforming conventional with our non-QM expanded guidelines. Remember, FHA, VA, USDA, not eligible for investment properties. So we'll quickly compare our conforming conventional. Everything else will stay the same. All we did was switch it to investment property. And let's see what the investment rates are this morning for conventional. Remember, conventional programs have added a loan level price adjustment. So As we see every morning, there are no options the computer is able to find for 1 discount point in cost. So the best combo the computer found this morning was a 6.875 rate for 3.25 discount points in cost and a final APR of 7.126. So still some great low rate options, but many of our investors would like to save some money out of pocket and don't mind going a higher rate. So these 3.2 discount points of in this example here are $13,000. That's quite a bit of money that the investor would typically like to deploy into another investment. So even if we cruise down the rate sheet here to find some other options, here's a lower cost option, 7.5 rate for 2.125 discount points in costs, a little bit higher APR, but our investors might like this better. However, with conventional, we're just limited there. There are no 1 discount point cost options. So we love to present our non-QM options as well for our borrowers that may qualify for either. So for our last demo, for the live rates, we always want to check out our investment property rates for expanded guidelines, aka non-QM. And when we select that, we will have 2 additional options now, which is first our income verification. As I mentioned before, the most popular for our investment programs is our DSCR program, and that's because it doesn't require any income verification from the borrower, no employment, no income from the borrower, simply going to use the estimated rental income from the property in order to cover the mortgage expenses, the PITIA of the proposed mortgage that we're going with here. So if the rents cover the expenses, that is a DSCR ratio greater than 1, which we have a plethora of programs for. We even have programs for ratios under 1, meaning the property doesn't quite cash flow. For this example, though, I'll set it at 1.5 just as a strong example so we can see all the different programs that we have that qualify for a DSCR at 1.5. Now, for prepayment penalty, that's the other option. For an investment property under non-QM, it's always standard to have a prepayment penalty. The typical is 3 years, so that's what we always select for our demos. We can choose 0 prepayment. That will severely limit the amount of loan programs and cost more money, but we do have it. And we have a 5-year option, which will cost less money, but that does limit the amount of loan programs as well. So we always want to choose 3 years. That is pretty standard. So let's check out our DSCR rates this morning. So looks like we got some great options here. We love to see rates in the 7s always. So 7.5 rate, 0.85 discount points in cost for a final APR of 7.575. That's pretty amazing when you compare to the conventional was also in the low 7s. So our investors here in this case would most likely take this option, much less discount points out of pocket. And as long as the property cash flows, the investor's typically happy. These are much easier loans as well, the DSCR loans, because they don't require any income or employment. We can start 1, 2, 5, 10 loans, and even do 2, 3, 4, 5 refinances to buy 2, 3, 5, 4 new properties at the same time, since there's no employment involved. So great options here. If you cruise down the sheet here, there's tons of different programs with different ratios, different rates. Some of these may allow short-term rental income, etc. So you see we have just dozens and dozens of different versions of this program. So please get with our team, find which one will fit best for you. Now, let me go ahead and introduce our topic for today, and we'll let Jose take over here in a second. Let me change my screen again. And for those of you who joined us late, the topic today, prime jumbo home loans. So prime jumbo typically is a subset of the jumbo, which is the most popular product probably for the last, I'd say, 3 or 4 years. Basically a conventional jumbo, I would say. It basically follows conventional guidelines for the most part. However, the loan amount will be greater than the conventional limit. So when we're talking about a jumbo loan, that simply means a loan amount that exceeds the conventional limit for that county or that area. So a jumbo loan would be that. A prime jumbo would be a specific set of that is the premier jumbo, which most similarly conforms to conventional guidelines, I guess I would say. So that will be my intro for the topic, but let me go ahead and pass it over to Jose, our sales manager with 27 years experience, to go over the nitty-gritty details and some actual quote examples. So you ready there, Jose?
Yes, I am. Thank you, everybody. Good morning, and thank you for joining us for Daily Rates Live with the Mortgage Calculator. Prime Jumbo is a product that is a little bit confusing because the prime name in it comes from the fact that they are using automated underwriting, specifically DU, to come up with the underwriting for the file. So very, very interesting product because the benefits are that it really streamlines the underwriting so that you don't, like if you have any issues with files that are normally resolved by DU, this would be one that would be the one for you. MI on the options that are above 80%, MI is usually also included in the rate. So let me get our first example here for you, which is going to be a prime jumbo purchase. Let me pull it up here a second. All right. So in our first option here, we have a 15% down prime jumbo purchase. So like I did note, this does use DU for the underwriting. So if you're looking for that 1 year, for example, 1 year tax return on a self-employed borrower, this is the one for you, right? So in this example right here, we're looking at $1 million purchase, $850,000 loan, and our lowest cost option is 7.875. There is a little bit of a lender credit there, with our lowest rate option being 7%. So if you look at these rates, these are pretty much very close to Fannie Mae rates. And please do note that this does include mortgage insurance built into the price. So very good option here. So our next option is our prime jumbo primary cash out refi. Again, very good option here. We can do our cash out at an 80% loan to value for our primary residences. So we have 7.5% as our lowest cost option. There is a little bit of a loan level price adjustment that you can see there compared to the purchase, but obviously this is a cash out refi, higher risk transaction. You can buy it down all the way to 6.875, which is a very good option there. And now we're going to go with our prime jumbo investment cash out refi at an 85% LTV. Excuse me, 75% LTV. So our lowest cost option, 7.75%. That is at par. So very good rates here. 7.125 is the lowest buy down option possible. And this is for our prime jumbo cash out on a primary residence. Excuse me. No, that was investment. I'm sorry. Yeah, wait a minute. I transpose my titles here. This is primary. Excuse me. This is our primary. And this is our investment, as you can see, obviously, from the rates here. This is 8.125% is our lowest cost option. 7.25% is our lowest rate option. And this is 75% LTV on this option. So high LTV options on these jumbo loans, no MI if you're going above 80%. And DU is what is requirement. When you are running the DU, you will need to obtain your finding of approved ineligible. And the only reason you are to get that ineligible is because of the loan amount being above the conforming loan limits for the area, which is what makes the loan a jumbo loan.
All right. I don't think we have any questions here, at least not that I see. So I think we can go ahead and wrap it up. Well, thank you, everybody.
Well, we had a question that came in there at the last minute.
Oh, I don't see. Oh, okay. Go ahead.
Does
Sorry, I
the
didn't see that.
primary still cap at 75%? On the cash out refi, let's check
No,
that.
you did an 80 cash out
Yeah,
example.
80, right. It
Yeah.
was 80 on the cash out and 85% on the purchase. The LTV is 5% lower on the investment property purchase and on the investment property cash out.
And what is MI included in all those quotes you were showing, Jose?
On any quote where MI would be applicable, which would be above 80% LTV, yes, the MI is built into the rate. There's a pricing add-on for that.
Yeah, typically the prime jumbos we include the MI. You could try to separate it out, but that's a little difficult there. So it's always included as adjustment.
All right, perfect. Well, thank you everyone for tuning in. We can go ahead and wrap it up. So if you would like a quote for one of these programs or any other quote, again, we specialize in non-QM loans, also do conventional FHA, VA, USDA, everything all the way to fix and flip and commercial and ground up construction and everything in between. So we have over 300 loan officers licensed in 22 states for primary residences, and we can do the business purpose loans such as the DSCR loan we went over today in 44 states. So you can go ahead and visit us at themortgagecalculator.com to be connected with one of our loan officers, or email us at info@themortgagecalculator.com. We'd be happy to connect you with one of our loan officer consultants that can walk you through the process of whatever loan fits best for you. Now, we do this show every single weekday at 11 a.m. Eastern time. So go ahead and tune in where we go through the different rates live that day. It's nice. You can see how the rates fluctuate and react to what's going on in the market. And then we do a deep dive topic every day like we did today with the prime jumbo loan. So thank you, everybody, for tuning in. And we hope to see you tomorrow at 11 a.m. Eastern. Take care.
Thanks, everybody.